Good morning and welcome to today's webcast, Shutdown and OMB Impacts on Accounting and Compliance. Before we begin, I'm going to play a brief housekeeping video.
Welcome and thanks for joining us. Our webcasts are designed to help elevate your business performance. Transform your future for the better with advisory solutions tailored to your vision and supported by our collective technical resources. Our presentation will start in a few moments. Before we begin, here are a few things to keep in mind. You can customize how you both view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can also adjust window size and placement or enter full screen mode using the controls at the top of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons, each relating to a different aspect of our session. You can download the group attendance sheet and a PDF copy of today's slides from the slide deck and handouts widget. You can ask our presenter questions during the webcast by typing a question in the Q&A window and clicking Submit. We'll do our best to answer all questions during the presentation or follow up via email. If you experience technical difficulty during today's presentation, refresh your browser by hitting the F5 key. Today's session will offer you 1 CPE credit. To receive credit, you must meet the requirements as specified by the National Association of State Boards of Accountancy. You must attend at least 50 minutes of the session and respond to at least 75% or 3 of the 4 polling questions, which we'll ask throughout today's presentation. Polling questions will appear within the slide window. To participate in the polls, please click on your answer and be sure to hit the Submit button to record your response. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon in the CPE Progress widget and download your CPE certificate. Don't worry, if you can't download your CPE certificate today, we'll email a copy to you in 2 weeks. If you're attending this webcast in a group, you must complete our group CPE attendance sheet to receive credit. The attendance sheet is available in our slide deck and handouts widget. Please have all group members sign it and send only 1 sheet per group. Also note that CPE credit only can be awarded to participants registered as themselves and isn't available for participants who view the on-demand version. As a reminder, the presentation you're about to see is not legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
Before we get started, I wanted to acknowledge our big news that Moss Adams and Baker Tilly have joined forces to redefine accounting, tax, and advisory services for the middle market. It's really exciting, and you can read more about it on our website. Now, I'm pleased to introduce today's presenters, Blaine Jasper, Principal, Anita Shah, Principal, and Hilary Tanneberg, Senior Manager. With that, I'll turn it over to Blaine to get us started.
All right, thank you, Kiva. And thanks everybody for joining us. It's certainly a very relevant top of mind topic. And so we'll go through the agenda here real quick just to give everybody a little bit of a preview of what we plan to cover today. So if you're attending this webcast, hopefully you are in the single audit world. So we're going to start off here by going through the single audit environment, some of the things, kind of overarching themes. We'll also talk about the considerations of the impact of the most recent government shutdown, along with, again, some of the other activities that are happening at the federal level that are having a significant impact on recipients of federal financial assistance. And then last but not least, we will go through some highlights from the draft of the 2025 compliance supplement. We will talk about some of the things that we do know relative to kind of where the draft stands and potential movement in terms of issuance, which we'll go through here later in the presentation. So I have the pleasure of giving everybody kind of an overview of where we stand here with the current single audit environment. So if you do or don't know, some folks may be familiar, I do sit on the AICPA's Governmental Audit Quality Center's Executive Committee. So some of the things I'll share here are information that we have access to. Of course, all of the opinions and things I'll share are those of my own, and I don't speak on behalf of the committee as a whole. So as we look here today, I always like to start off with kind of the statistics. And so the reason that that's relevant is because if you look at kind of where we started pre-pandemic in 2019, we were hovering around 37,000 single audits done annually. Not a small number, but then of course with the pandemic funding and the significant influx of new recipients, that number really ballooned in about 2022 to over 47,000 single audits submitted. So an additional 10,000 that were being crammed through the system. We have since pulled back a little bit. In 2024, as of the most recent submission data, we're at about 42,000. Actually, it's probably closer to 43,000 as we sit here today. But the reason that that's relevant is because it certainly exacerbates the current dilemma that we have relative to resources, both on the auditee and on the auditor and firm side. So certainly something that we certainly keep in mind as a profession, and something that we're always looking to kind of to deal with. So other single audit related developments, of course, it's not a surprise. The current federal environment has been, the term unprecedented is used a lot. I don't really know that precedent is really relevant anymore. I think every day seems to be something unprecedented, but there have been a lot of unique and unusual or maybe atypical sorts of events or circumstances, and we'll talk a little bit about those and how you can potentially prepare or respond to that. Of course, the compliance supplement delay has put a challenge on the auditees getting their audits submitted timely, and certainly on us as the auditors trying to get those audits completed timely with the resources we have set aside. There have been a number of enhancive changes to the AICPA audit and accounting guide. You may wonder, why is that relevant to me as a recipient? Well, that does really govern a lot of what we do in the audit. So we'll talk a little bit about what you might expect relative to some of those updates. If you haven't been paying close attention, you do know that the 24 uniform guidance revisions are now effective, both on the recipient side and then on the auditor side relative to the increases to the audit threshold. So we'll talk a little bit about that as well. And then last but not least, we don't have a slide on the Financial Management Risk Reduction Act, but it is relevant again for auditees and certainly those that are auditors on the phone to understand how that impacts us. And so that really was a bipartisan piece of legislation signed in December of 2024. The reason that it's relevant is because what it did was it instructed the government to conduct what they called a single audit quality analysis. If you recall back in 2007, there was a single audit quality study performed. That was much more expansive. The government effectively did what we would refer to as like a peer review. They came out, did a QCR, looked at a lot of firms' documentation. This will be less in scope. It will leverage third-party peer review programs. But the reason it's relevant is because the results the last time created significant changes to both the uniform guidance, the audit requirements, and the rules in which we follow as we're conducting those audits. So the years that's looking at are between 2023 and 2025. HHS is leading the charge on that. They did the last quality study, and the results are anticipated in 2026. So certainly something to keep in mind. So the delayed supplement issuance, again, as we sit here today, we don't have a compliance supplement. I can report out that there has been some acknowledgement from OMB after the shutdown relative to some of the efforts that we have been taking on the AICPA's Governmental Audit Quality Center. We are urging OMB to fast track or issue that supplement. Of course, the draft was published to be used for planning purposes, which Anita will kind of go through here in a couple of slides. But as we sit here today, we do not have a final draft of the supplement, but we are encouraged by the fact that OMB has re-engaged after the shutdown has concluded and have acknowledged the importance of getting that issued. Of course, changes to federal agencies and some of the grant-related programs are creating additional risks, both on the budgetary side. If you were a recipient that had received a significant amount of funding and then subsequently that was terminated. And then in addition, what happens when a federal agency closes? USAID is a good example of that. How do you report that? How does that affect the accounting? Certainly something that we'll talk about here in a few minutes. If this wasn't enough, we were already dealing with kind of the historical wind down of some of the significant funding legislation that happened relative to COVID-19, the Investment in Infrastructure and Jobs Act, some of that, kind of trickling its way through, and again, creating a lot of funding gaps and pressures on budgets that were already strained. And then last but not least, like I said, the staffing challenges have really been precipitous across the industry, whether that's at the auditee's perspective or on the auditor side. And so the AICPA, if you have not obtained a copy of that, they did a joint study that provides some recommendations, certainly worth a read, and something that, again, is helpful to kind of advance the cause, to get more CPAs to go into that public sector discipline. I kind of make a couple of comments here. Again, we'll talk a little bit more on kind of the mechanics of the accounting and what you might think through here. But, it's every day. You got to open up the news and there's some additional information about agencies that might be thinking of closing or terminating grants or contracts. Most recently, the Department of Education came out yesterday talking about, potentially moving grant programs for K through 12 and post-secondary education over to the Department of Labor, talking about maybe circumventing Congress through interagency agreements. What that's really doing is just creating a great deal of uncertainty. And that, of course, trickles into compliance risk, right? So if you're an auditee and you're not really sure what's going on, you're getting mixed information, you have a grant terminated and then it's reinstated. When we come in to audit that, of course, we're going to be looking at the requirements that are in place or that were in place at that time. So it's important to remember to keep everything documented. And we have a few recommendations here on the next slide as well. Of course, some of the COVID-19 waivers, those are lapsing. The Department of Education, came out with ESSER funding. They tried to curtail some of that. That was then walked back. That goes well with the second to last bullet point related to court cases. I know a lot of folks on the call are likely, affiliated with research or institutions of higher education. One of the big questions we get often is, what's going on with indirect costs? I can tell you, as we sit here today, there is no overarching policy change relative to indirect cost caps. Of course, several agencies came out with that. But with regards to legal challenges, some cases are still in process. Some cases have been closed. But as we sit here today, there has been no imposed cap. But we have had a number of clients, really looking to seek information on how they should be submitting that reimbursement and how that affects their accounting. And then last but not least, of course, as you look at the kind of the feedback loop, we are seeing an uptick in follow-up from federal agencies relative to our audit findings. I've had an agency follow up on an audit finding in the last year from 2018. So I think there's a significant emphasis on accountability, and that is, of course, putting pressure on the non-federal audit teams to really make sure that they're closing out those audit findings and recouping any improper payments. And this is, a slide here. We provide this more as a basis. This doesn't include all relevant executive orders, but a couple of key points to consider here. When you look at, the list here, only 2 of these items are really legislation, meaning that they've been obviously gone through Congress, they've been signed into law, and they have, are in varying stages of enactment. The One Big Beautiful Bill Act did not contain a significant amount of provisions for federal financial assistance, but it did affect institutions of higher education. There has been some recent developments related to some negotiated rulemaking in actually applying that. A lot of those provisions that were specific to institutions of higher education related to things like capping loan limits, eliminating Grad Plus loans. The department came out to try to redefine what a professional student is. And, I've seen reports taking, potential programs from like 2,000 programs that would be eligible down to 600. So again, this is a very kind of rapidly developing story. And it's something that as you are kind of sitting here today trying to digest, it can be very overwhelming. So I would encourage you to reach out to your auditors. My job, I sit in our national office, so it's my job to keep our teams informed. We regularly push out communication to our teams. So, if we are your auditor, your advisor, or just a friendly friend down the road, please don't hesitate to reach out in those instances. But again, the One Big Beautiful Bill Act is one that I would say, contains significant, pressures on institutions of higher education. The other one to note would be the improving oversight for federal grant making. We'll talk about that as it relates to the 25 uniform guidance revisions that are being floated, but that contained, a little bit of a preview in terms of how OMB is viewing the federal grant-making landscape. So that some of the key provisions in that really talked about limiting indirect costs, providing discretionary awards to institutions that had the lowest indirect cost rate, really looking at terminating and termination clauses and creating a bit more flexibility for OMB and agencies to terminate contracts, and then also implementing potential drawdown controls where you would have to submit additional information before you can actually redraw down your funding. So again, all of those things kind of signal what could potentially be coming as we look forward to potential revisions to the uniform guidance. And then this slide here, really, as we kind of advise our clients, a couple of things just to kind of keep in mind here. One, continue to follow your terms and conditions. If you're in doubt in terms of what you're supposed to be following, a good example is when that January 27th memo came out and everybody panicked and wanted to draw down funds all at once. We were aware of several entities that received communication from an agency saying, hey, you got to return that funding. You can't draw all that down. It violates the cash management requirements. I would also say make sure you're taking copies of whatever guidance you're looking at. I have a lot of bookmarks to different parts of federal websites that have been moved or taken down. And so it's really important to kind of keep a record of that. So print the PDF, take a screenshot, keep it in your files in case something subsequently changes. Again, when in doubt, just try not to panic, try to keep everything well organized, document. And again, communicate with your auditors because we're going to be coming back and looking at that. And of course, hindsight can be 20/20 when these things are really evolving. So with that, I'll turn it over to Kiva to do our first polling question.
Thank you, Blaine. This is our first of 4 polling questions. Has your fiscal year 2025 single audit been completed? A, yes. B, no. C, started but not finished. D, unsure. I'll give everybody a few moments to respond. To participate, please click the button next to the answer you choose and hit submit. Looks like about 80% of those answers are in. If anybody would like to participate, please click the button next to the answer you choose and hit submit.
Yeah, this isn't a trick question. Certainly, as we talk about the 25 supplements not available, but it is potential if you're before 6/30 year end that could be a correct answer for you.
Okay, last chance to get those answers in. Okay, and here are those results.
All right, sort of what we expected, I would say, in terms of those that are yes, could potentially have been prior to 6/30 year ends. A lot of folks, again, if you're in a 6/30, 25 or thereafter year end, it's very likely that you're perhaps in the no or the started but not finished. So definitely in line with what we were expecting here. All right, and I'll turn it over to Anita to take us through our next section.
Great, thanks, Blaine. Like Blaine mentioned, we had a lot of executive orders and OMB memos come out about grant terminations. There's also just a lot of consternation about potential terminations to grant awards. With the adding to that was the government shutdown. So you may or may not be familiar, but in August there was an executive order that came out that said that even if your programs are in compliance with the requirements of the program of the award, there's a possibility there's a termination for convenience clause that's being added across all federal programs, or that's what the administration has told OMB to do. And their goal is to basically say that if an award no longer effectuates the program's goals or agency priorities, they can terminate that federal award. Regarding the accounting for it, if you have received a termination letter about it for a grant award, you can still charge allowable costs to the date of the termination award, and those costs would be reimbursable to the date, not past that date. But as long as you have allowable costs to that date where the award was active and they're allowable, you should be able to charge those costs and be reimbursed for it. But if you do get one of those letters, if you get that termination notice or even potential future rescissions to the award, definitely reach out to your contracting individual. Sometimes those award letters could be going to your program directors, and it may not always go to finance. So make sure you're communicating that across the board and across your organization to ensure that you're reaching out to your contracting officer, your federal agency contact to get specific details. So having that in an email is really good, or even if they want to send you an actual notice, that'll be helpful so that you can retain that as your documentation when you're applying for, applying for that drawdown reimbursement. With some other changes that also occurred, the federal acquisition thresholds were changed this year. So in August 27th, there were some changes made to the federal acquisition threshold. And the OMB uniform guidance, the 2 CFR, does refer to the FAR, to the federal acquisition regulation for a few of those guidelines, for a few of those thresholds. So here's a table for what changed. The micro purchase threshold. So those of you that are in procurement, you know that the micro purchase threshold is a threshold where above that you have to get at least more than one quote for procurement purposes, or whatever your policy says. So definitely follow your policy, but this is what the uniform guidance says. That threshold went from 10,000 to 15,000. That simplified acquisition threshold, where you need to get a written quote. So the micro purchase threshold is not necessarily a written quote, but again, refer to your own policies. I'm just talking about what the uniform guidance says. The simplified acquisition threshold, if you depending on what your policy says, or if you're just referring to the uniform guidance policies, that threshold went from $250,000 to $350,000. So for going out to bid for RFPs, getting competitive quotes and whatnot, that threshold is now $350,000. And then the FAFATA reporting, I call it FAFATA, but it's the Funding, Accounting, and Transparency Act. For those of you that are involved in this reporting, so if you have sub-awards that you've made for $30,000 and above, you have to do certain reporting. And that threshold, that according to the federal acquisition regulation, that threshold has gone up to $40,000. But right now, uniform guidance still refers to $30,000 in the 2 CFR. So that threshold, even though FAR changed their threshold, it hasn't changed in uniform guidance. So that's still at that $30,000 amount. Again, I will reiterate, make sure you're following your own policies. This is what the uniform guidance says. Your policies may have a different dollar amount or different procurement approach. And then there were some challenges. So we've gotten a lot of questions from our clients about what do we do regarding shutdown, regarding what if the award has been terminated, what if the agencies no longer exist, like Blaine mentioned earlier, the USID. There are definitely certain considerations you have to think about for not just accounting purposes, but also reporting in your financial statements and in your FIFA and your schedule of expenditures of federal awards. One will be the first bullet is collectability of your grants and contributions receivable. Make sure you're reading through your grant revisions, any revisions to your terms and conditions to ensure that you're evaluating that. You're evaluating that when you're considering your allowance for doubtful accounts as well. Subsequent event disclosures, depending on your year end. If your year end is coming up at the end of your calendar year end, maybe this is not a concern for at least the government shutdown piece of it, but still there could be other potential changes or changes to your grant awards. So ensure that you're reviewing that and evaluating that as part of your subsequent event disclosures. Risks and uncertainties. So when you're not sure if there has been information from at the higher level from the federal administration or even from the granting agency saying that there could be changes to your grant awards, you'll want to evaluate whether you want to document that in your notes to your financial statements. And then those involved in budgeting and evaluating your liquidity, maybe this is a point to consider when these are things to consider when you're evaluating your budget and maybe even considering revising your budget. Regarding accounting for awards that no longer exist or agencies that no longer exist, you will report them in your financial statements and your FIFA through the date that up until you have that termination letter. So you would still report them as usual until that date. Let's say if something ended in March of 2023 and you have a year end of March of 2025 and you have a year end of June 30, 2025, you would still have expenses in your FIFA through March of 2025. You would still report that on your FIFA. because those awards did exist as of that time. And then Blaine kind of mentioned this. There's still a lot of questions about the indirect cost and the proposed IDC caps on certain awards. Definitely evaluate or look at your grant award documents, any revisions to evaluate what your allowable indirect cost is for that program period to be able to include that on the FIFA. You're not allowed to include anything that's above the maximum threshold on the indirect cost on your FIFA.
Yeah, and I think just one thing to kind of reiterate that you mentioned, but it's sometimes helpful to say it a different way too, is you'll know if your grant or contract was terminated. I know earlier on in the year, we would get a lot of questions from clients. They'd see news articles, they'd see headlines, FEMA's closing, I have a FEMA award, should I report this? A couple things to consider with accounting guidance, facts and circumstances have to exist as of the date of the balance sheet relative to, recording any sort of an allowance or a reduction. Obviously, not-for-profit versus GASB, there's going to be different challenges with that. But again, you will know if that contract is terminated. They would send you a termination notice. And as Anita mentioned, the guidance will say that allowable costs incurred through the date of termination are still to be recouped, even if, of course, that grant is subsequently terminated. So that was something that, again, we get a lot of questions still on that. So I think that was one of the questions that may have come through in terms of what documentation you might need and termination and settlement costs. So wanted to make sure that we reiterated that point.
Yeah, and when in doubt, please make your auditors your friends. Reach out to them before you're submitting information to your auditor for final audit-ready documents. Reach out to them throughout the year to make sure that you're documenting this and you're calculating the information correctly in your accounting system, but also in your FIFA and your financial reports that you're submitting to the granting agency. All right, with that, I think I'm moving this on to Hilary.
Okay, so diving a bit more into indirect costs, as Blaine mentioned at the beginning, many of these agencies are in active legal actions or have already completed some legal actions against those imposed rates. However, as of today, again, there is no overarching decision on those indirects, so be sure to stay connected with your federal agencies. However, there is a joint associations group, JAG, that has released the FAIR model. We're going to get into detail on the next slide of that. However, the next step for that FAIR model will be for the federal agencies to review the model, and then if accepted, it will be written into uniform guidance. So the Joint Associations Group was formed in response to the renewed attacks on the federal reimbursement of indirect cost, as well as potentially the proposed 15% cap having high problematic issues for research enterprises. So the JAG is composed of 10 national organizations representing institutions of higher education as well as nonprofit organizations. And they have come up with what they are calling the FAIR model. And this model really hopes to standardize the calculation to reduce confusion as well as promoting the transparency. So under the FAIR model, there are two options. One is the expanded or detailed option. What this does is it takes your research performance costs, such as senior key personnel, other personnel, supplies, publication costs. These are project-specific costs to actually perform the research. And then it adds your essential research performance support. This would include regulatory compliance, award monitoring, oversight, and reporting. These are essential research performance facilities, which would be a % of budget, and then your research information services. These are all project-specific costs needed to support the performance of the research. And then you have a general research operations, which is a % of budget. They've done some research and identified approximately 15% of the budget can be attributed to these types of items. And these are things that cannot be easily assigned to a given project, but do apply to all. So that's the expanded option. Or there is a base or simple option. This is available to all institutions and would be especially attractive for those with insufficient administrative resources or maybe just lacking the type of research appropriate for that expanded option. So it still sticks with your research performance costs, and then it takes your essential research performance support is still the same for identifiable direct costs. However, then it takes a % of your total budget for the essential research performance facilities and research information services. Again, they've done some research and identified typically this is about 10% of your total budget. And then your general research operations, instead of a detailed breakout, that is still that 15% of the budget. So right off the top, under that base or simple option, you do have a 25% total budget to cover some of the costs while still being able to charge those project specific costs needed to support performance of the research. So in recap, the FAIR model is going to remove the F&A rate. It allows institutions to choose the option that is best for them. By charging actual costs of research, the FAIR model increases accountability and transparency. It accommodates all types and sizes of institutions, accounts automatically for geographic cost differentials, and then it aligns the project costs with the type of work being performed while still satisfying some of those government-mandated regulatory compliance. And then lastly, as I mentioned previously, this is really hoping to address confusion about the institutional use of reimbursed funds by tracking costs in specific and allowable categories, again, increasing hopefully the transparency and reducing some of that confusion. With that, Kiva, we are to our next poll.
Thank you, Hilary. This is our second of 4 polling questions. Has your organization been impacted by the changes to indirect cost rates? A, no, B, minimal, C, significant, or D, not yet, but anticipate some impact. As a reminder, if you would like to receive CPE credit for today's webcast, you will need to respond to at least 3 of the 4 polling questions.
Yeah, we're getting some questions on indirect costs. I think in general, the reason we spent some time talking about the FAIR model is it's one of the potential opportunity or potential options that are being presented. We do know that indirect costs is a very top of mind issue for the government these days. Been a lot of kind of activity, certainly just providing across the board 15% cap, all the way to, again, something that might be a little bit more sophisticated and targeted, but with the, just different sorts of entities out there, there's likely to be a lot of debate on this if and when that does make its way into the actual regulations.
Just to add some clarity, for any organization that has a negotiated indirect cost rate, or for those organizations or tribal governments that have Public Law 93638 funding, these caps do not apply to that at this time. There's no indication that there's been a change in that area or any change to your negotiated rate. So this only applies to those competitive grants where the federal agency has indicated that they're putting a cap on those indirect costs.
Yeah, and I think that's another good reminder, Anita. When you look at some of the a few slides back, we had kind of the agencies that had started to put caps. The reason we're talking about higher ed is because they've really been the sort of the target or the top of that list. But I believe in a DOE proposal, the Department of Energy, they came out with one that was specific to maybe institutions of higher ed. And then later on, they came out and expanded that to not-for-profits and potentially even, public sector related entities. So it's a very much an evolving landscape, and one that it's really anybody's bet until we start seeing kind of the ink on the paper as to what's going to come out. So.
Okay, and here are the results of that poll.
All right. Well, with that, we're going to go through kind of our next item here, which is on the horizon. So things that we can expect. So we've previewed a little bit related to a potential update to the uniform guidance. So you might ask, well, is this normal, right? So we just went through the 2024 uniform guidance revisions. Generally speaking, the uniform guidance is not reopened more than once every 5-ish years. The last time the UG was opened was back in 2020 when they made substantial changes that then brought us to 2024. We do know that OMB is working on this. As to what will be included in a final revision really remains to be seen. I've been part of conversations with OMB where they've sort of alluded to that the changes would not really impact auditors, but then when you kind of ask probing questions about, well, does it impact indirect costs? And they say yes. well, that sort of indirectly impacts auditors. So, but I've also seen reports where, people are coming out, and making statements about, trying to make a bit more of a substantial overhaul to really limit back and get to the bare bones, of what is needed to meet the statutory requirements for appropriations law and nothing more. So, but what we do in terms of kind of have heard from federal agencies or again, what we could expect from recent executive orders really relates to those two specific provisions that we talked about. So really strengthening that termination for convenience clause for discretionary awards, and then of course the revisions to indirect costs. Again, not sure if they're still considering the JAG model or the FAIR model, excuse me, from JAG, if they're going to go with something that's again across the board. But the good thing is when OMB does revise the uniform guidance, it does go through, of course, the Federal Register. There's an opportunity to provide comments. And so when that does come out, if you're an interested party, it is important to make sure your voice is heard from that perspective. As we look at this compliance supplement, so just a little bit of inside baseball in terms of how the process typically works. We're still awaiting the issuance of the 25 supplement. Again, I hope it comes out before Christmas. I'm not sure if that's a Christmas present or if it's a little bit of the opposite, because that means everybody's going to want to get their stuff issued before the holiday, and maybe they don't get to go on vacation. But nonetheless, we are hoping that it gets issued here in the next 30 days. But again, that is purely speculation. OMB hasn't committed to a timeline. What we do know is that there's expected to be minimal changes between the draft and the final version, and there isn't any intention for them to hold it up. They have expressed that they want to get it issued, but again, there's just been a lot of other priorities that they've been directing their attention to. As it relates to 2026, though, so normally the compliance supplement process kicks off in July. That's when OMB starts interacting with the federal agencies to start getting their updates to those different Part 4 sections. That process to date has not begun. The administration has been slightly critical of the time and effort that it takes to update the supplement, really trying to understand why it's so long, why it's so many pages, and really understand the importance. So we don't know for sure in terms of what will happen, but a couple of potential different scenarios that could happen that are probably more realistic than they were maybe 12 to 24 months ago would be potentially not issuing an annual supplement. So would OMB do something that's more or less frequent? They could also do what they did back in 2018 and issue a skinny supplement where they're really just making very minimal targeted changes. We really don't know, but what we can expect is that it's likely not to be business as usual with regards to us getting a compliance supplement in the May-June timeframe. And as you probably know as a recipient, that really starts to put compression on that audit timeline because as we don't have the guidance to get started, it's hard to go out and do that interim testing. And so everything sort of gets pushed back accordingly. So the AICPA, excuse me, is advocating obviously to continue to stress the importance of this. But we do like to keep people aware as to what we're hearing at that level. I mentioned this earlier, but again, just a few moments here, since a lot of folks on this call are going to be on the recipient side, not necessarily the auditor side, but there have been a substantial overhaul to this guide. So we started this process actually about 4 years ago now, where we really started to take a look at the guide, started to kind of poke holes. Generally speaking, the guide is updated every year for conforming changes, which really just means if there's an update to a regulation or an auditing standard, it gets put into the guide and then it gets published. But there hasn't been a substantial overhaul in over 15 years. So what we did was we took a look, kind of broke everything down, made some significant enhancement changes, and then put that in as an appendix for the 2025 guide. And that's important to note because an appendix, the guide doesn't have an effective date like a standard does. Essentially, it's sort of effective when issued. And a guide doesn't necessarily establish requirements. What it is it's an interpretive publication, meaning that auditors have to consider it as they're applying generally accepted auditing standards. So generally speaking, this does provide a lot of our methodology or is the basis for that. So what you could be experiencing as a recipient in terms of when this becomes kind of in the full text of the guide, and as it's noted on the slide in 2026, that you may start to receive some different questions or your auditors are asking for different things or perhaps again, things might feel a little different and that would generally be why. So the areas where there were the most changes, if you look on the slide here, one of them was that we really just reorganized. There was, chapters 1 through 13. Really, the changes were focused on the single audit chapters, which would be 5 through 14, excuse me. There's now 19 chapters. We reorganized it to go in the flow of how a single audit is generally conducted, as opposed to before where you'd kind of jump between chapters. It was hard to find the same concept you were looking for, et cetera. In addition, we have made some changes to some of the key topics, including entity-wide procedures, including how IT influences our audit procedures and how IT might be used in the control environment at a recipient. We've also made substantial changes to the risk assessment process, really taking a look at SAS 145, which updated our risk assessment standards back in 2023, and making sure that we're modernizing that in terms of how the single audit's being conducted. And then there have been some changes to our sample size determination. So again, something to keep in mind as a recipient, if things are feeling a little bit different, generally speaking, that is going to be why is because of these changes to that audit guide. So again, something just to keep on your radar. You don't have to necessarily be expert in all of these topics, but your auditors certainly will be impacted.
With that, we'll cover just highlights of the OMB compliance supplement for 2025. Like Blaine mentioned, there's a draft that's been issued, and OMB has asked us that we can use this for planning purposes. So we can pretty much go through the audit, but we cannot issue the audit yet until the final has been issued. The final OMB compliance supplement has been issued. As of now, the OMB staff has informed us that they don't expect significant changes from the planning from this draft supplement to the final version. So once that final version is published, it will be available on GAQC's website and OMB's website. This 2025 compliance supplement is effective for fiscal year ends June 30, 2025 onwards. So starting with July 1, 2025 through June 30, 2025 onwards. We get a common question. I know we already got a question on this as well, that can I issue my June 30 year-end single audit without having the final 2025 compliance supplement having been issued? No, unfortunately, we have been told that we cannot issue the audit reports, the single audit reports for 2025 June 30 onwards until that final version has been issued, unless there's an alternative solution that OMB provides. Right now, Blaine mentioned this earlier as well, that there is indication that they might be finalizing that 2025 compliance supplement soon. We don't have a date on that yet, but we unfortunately can't issue those 6/30 year-end single audits yet. We also get the follow-up question, well, will there be an extension to the 9-month deadline for since there's been a delay in the OMB compliance supplement? As of now, there's been no indication that they're going to be extending that 9-month time frame, but if that delay of getting this OMB compliance supplement gets further and further down the road where we're not getting that final version, GAQC will be advocating for action to try to get OMB and federal agencies to extend that 9-month deadline. But again, as of today, we don't have that information. We don't have information about when that final version is coming out. We also have had clients ask us, what about state agencies or pass-through entities that have deadlines that are before the 9-month year end, but it's coming up soon, but we don't auditors aren't issuing the audit? Unfortunately, right now, that is truly the case. There are many state agencies that have provided extensions to their initial deadlines, and work with your pass-through entity as well regarding this, because they're aware they themselves can't have their audit issued either until the 2025 final supplement comes out, or if OMB provides us other guidelines. What you can do is you can evaluate whether your pass-through agency or state agency is willing to accept just your basic financial statements and the FIFA and the notes to the FIFA as a supplementary information without the single audit report. That could be an option, and we've seen some of our clients do take that option because they really want the audited numbers. Right now, they're okay with waiting on the single audit piece of it. So there is that option as well. So definitely have communications with your state or pass-through entity awarding officials to ensure you're providing them what they need. Just a reminder again, we have to put this slide in. Make sure know that the 2025 compliance supplement is a draft right now. Again, we believe that there won't be significant changes with the final version, but there could be. OMB has told us that there won't be, but we don't know that until we get the final version. So just keep that in mind. So if your auditors go through the entire audit and then they're just waiting on the final version, if there are significant changes, there may be additional things that your auditors may ask for. So just keep that time frame in mind. I think with that, Kiva, we've got another polling question.
Thank you, Anita. This is our third of 4 polling questions. Has the delay in compliance supplement impacted your organization? A, not at all. B, some. C, significant. Or D, unsure. For those of you who would like a copy of today's slide deck, you can download one from the folder that says slide deck and handouts. We will also be sending the slides via email after the webcast.
Yeah, Anita, a topic that you just covered, since we've got a few moments here while folks get their answers in, was related to some of the issuance. So I think just to kind of reiterate, we've had one question about, kind of, hey, can you issue the financial statements before you issue the single audit, since your financial statement audit's done in accordance with government auditing standards, and we know that the single audit, includes that opinion. So that was one of the questions. Again, I think you sort of touched on it, but maybe just reiterating what you previously stated.
Yes, so you can issue your financial statement and your FIFA along with supplementary, your FIFA and your notes to the FIFA as supplementary information, but you cannot, the auditors won't be able to issue the single audit report. So there won't be any inclusion of the single audit report, the schedule of findings and question costs, and all of that reporting package until the single audit is completed, which can't be completed until that final compliance supplement is out. So you can get your numbers, but you can't get that single audit report yet.
Awesome, thank you.
It looks like we're about 87% of answers in. This is your last chance to get that answer, and if you would like to participate in the polls for CPE.
And 2 questions about the clearinghouse. Right now, the deadline still stands. So again, OMB hasn't signaled whether there will be an extension. Of course, that first deadline is going to be March 31st of 2026. But as of today, there is no extension in terms of the FAC submission deadline.
Okay, and here are the results to that poll.
Okay. That's about 1/3 have been affected. A little over 1/3, but again, we don't have the date yet. We're hoping now that the federal government has opened up again that we'll get that final one soon, but no promises here. Oops, I think I clicked. All right, so for the compliance supplement, some of the major steps, I won't bore you with all of the details because as recipients, the compliance supplement really is for the auditors. It's good for recipients to know about the compliance supplement and the changes that have occurred because then you can prepare for what the auditors will be looking for compliance purposes and what testing they'll be doing, what focus areas they'll be looking at. But here is, some of the major updates that were made to the 2025 draft compliance supplement. Part 2, there were some changes where compliance supplements were added or subtracted from the program. For Part 3, the biggest change here was that there are 2 Part 3s now. There's Part 3.1, which refers to basically compliance requirements that were pre-2024 uniform guidance revision. And then for 3.2, Part 3.2, that includes the 2024 uniform guidance revision. For those of you that are heavily involved in the single audit rules, you know that there were several revisions made in the 2024 uniform guidance update, and a lot of those were effective 10/1/2024 or even some as of 10/1/2025. So there are 2 different parts to it, just so that there's clarification as to which part the auditors should be looking at for guidelines on how to audit or suggested audit procedures for those programs. In Part 4, there were some programs changed, removed. Thankfully, no clusters were changed, and all of the National Science Foundation and National Institute of Health programs are all part of the R&D cluster. The 2 programs that were removed from the higher risk designations is your emergency rental assistance and the Treasury state and local, the coronavirus state and local fiscal recovery funds. So for those of you that had significant funding from Treasury for these programs, we're probably getting audited every year for the last few years, and now it's no longer considered a higher risk program. So if you're considered a low risk auditee and there were no findings previous years, maybe it won't be audited this year. Part 3.1, again, I don't want to bore you all with the details as the recipients. This is more so for the auditors, but for recipients, Just note that 3.1 and 3.2 did clarify significant changes did clarify some of the changes to take into account revisions that were made even in 2020 for uniform guidance that weren't updated in the OMB compliance supplement. So they just updated some of the wording in the allowable cost sections and procurement sections. For procurement, for those of you that are low-risk auditees, you can choose to have your micro-purchase threshold up to $50,000 if you meet certain other criteria. So they've added some more documentation in the compliance supplement about why that, how to document that. Also, the FAFATA testing is now done. That reporting that you have to do is now in SAM.gov, and then instead of the previous website, which is FSRS.gov. 3.2, again, there were changes made specifically to align with the 2024 uniform guidance. The title change from matching to cost sharing. And then there are other 3 areas where most changes were included, and Hilary will go over that in a minute here. Hilary?
Sorry about that. Okay, so moving into uniform guidance revisions, this is just a quick hit list of some items to pay attention to. I'm going to go ahead and move on to the next slide and get into some more of the details. So first off, there were some threshold changes listed here. Again, some increases to some of the items, as well as a change to the modified total direct cost now allows entities to recover the indirect costs on the first $50,000 of subaward costs instead of previous $25,000. Do want to note, however, that the supplies and equipment is actually the lesser of your capitalization or your entity's capitalization threshold for financial statement purposes, or the uniform guidance thresholds noted here. From an audit perspective, again, that single audit threshold has moved from $750,000 to $1 million. And as such, that's going to also impact that type A threshold that determines the major programs to be audited from that $750,000 to $1 million. So a few items on allowable costs. There is now an Exhibit 1 that shows the selected item of costs. It's actually almost 6 pages long. This is really nice. It shows the selected cost item, the uniform guidance general reference. It identifies the item, if the item requires prior approval. And it also indicates its allowability by the type of organization that you are. Local government, Indian tribe, higher education, etc. And then it also identifies if the item of cost is treated the same across the non-federal entities. Again, indirect cost rate, we've talked a lot about that so far. And then there are some other changes just to align the with the various other uniform guidance revisions. So again, just a lot of good detail in this section about what is and is not allowable. Equipment and real property. One item to note is that this does now allow Indian tribes to use their own policies and procedures, or tribal laws and procedures. If such laws and procedures don't exist, then the tribes do need to follow 2 CFR. Again, that capitalization threshold is now up to $10,000. But again, it's the lesser of your capitalization policy for your entity, or the threshold noted here by uniform guidance. And then lastly, when equipment is purchased with a federal award and it's no longer needed for a federal program, the recipient or subrecipient must request the disposition instructions from your federal agency or pass-through entity. That cost, or the per unit market value, has increased to $10,000, in which you would need to request those disposition instructions. So again, just adding some amounts to those thresholds to lower the burden in some areas. Procurement and suspension and debarment. Again, a change for Indian tribes in that they must use the same policies and procedures they use for their general procurements. Again, unless those don't exist, then you got to follow 2 CFR. And then again, just some terminology changes to align more clearly. A couple of reminder on policy updates. So with all these changes, it's always important to go back and look at your policies and make sure they're still in accordance with the revisions. Couple items I'm going to point out here is the internal controls. added a requirement that the recipient or subrecipient take reasonable cybersecurity and other measures to safeguard information, including protected, personally identifiable, and other types of information. OMB did not provide a framework for cybersecurity and other measures. They are leaving this up to the federal agencies to provide specific guidance. The other item I just wanted to point out is prizes. The language was updated to clarify that gifts are included in the definition, and it goes on to kind of talk about how prizes should be treated. So again, another opportunity for you to go back and look at your policies and make sure that they are updated and in alignment with the changes noted here. And Kiva, I believe we are on to our last poll.
Yes, thank you so much, Hilary. This is our final polling question. Has your organization started implementing the updates to policies and procedures? A, no. B, yes. C, unsure. D, what changed? Once you've completed all CPE requirements, you will be able to download a PDF of your CPE certificate from the CPE progress window.
All right, another good question. We've been trying to answer questions directly in the chats if we can. For those that we have not answered, if your question hasn't been answered, we will seek to follow up, of course. But one question related to policy updates, just to kind of reaffirm what Hilary said, especially related to some of the changes, so equipment or procurement. Tribes, of course, were granted flexibility to observe tribal law or policy versus what before, where they had to follow 2 CFR. The question was really, do tribal policies need to meet the minimum requirements in 2 CFR? I would go back to the specific, it's a little bit of a caveat. We don't necessarily know what exactly the question is referring to, but in general, for equipment and both for procurement, they refer to tribal policy, but they say if there isn't a policy or law, then you would revert back to the 2 CFR requirements. So it is possible that you would need to meet the minimum unless, again, you have tribal law or policy to address that.
Yeah, just to clarify, tribes do not have to meet the minimum for procurement or equipment if you have your own policy, documented policy. That is, tribes finally were being considered as equivalent to a state, where states can create their own policy. They don't have to meet the minimum either. So if you have your own documented policy as a tribe, you do not have to meet that minimum.
Yeah, and just in the interest of time, I think we've got about 80% of folks that have submitted their answers. So we'll go ahead and keep advancing. And just to take us through just the last one here, 35% unsure. So that was a little bit of a cheat sheet on the policy. There are a few items that the uniform guidance requires to be documented in a policy. Those are listed on that slide, but those are just the changes. So there is a list of those. If you are unsure, and I like Anita's phrase, make your auditor your friend. We're happy to help you kind of navigate some of that as well. So just a few of the items in the appendix. Again, this is for the auditors in the room, but it does matter for recipients, especially tribal governments, state and local governments, or entities that might be receiving the coronavirus state and local fiscal recovery fund. So in 2025, the higher risk designated listing did remove 2 of the pandemic programs, so the emergency rental assistance and CSL FRF, the one I just mentioned, to leave just the Medicaid cluster, which has been on there almost since eternity, and then one that has very specific applicability. There's only about 40 recipients across the country for that specific program, but again, that is one that remains on the list this particular year. But the list has been chipped down. Again, that is positive for the auditors in the room. We still now follow the normal risk assessment process. In terms of due dates, so we talked about exceptions and granting exceptions. The uniform guidance in the 24 revisions did specify that individual exceptions to the single audit deadline are that responsibility of a federal agency. So an individual recipient now needs to reach out to their cognizant agency for audit, or their oversight agency if they don't have a cognizant agency, to seek that exception. And those exceptions are granted in very limited circumstances. They actually come out and say, it's not just because you don't want to, or you need to retain your low risk auditee status. There are very specific extenuating circumstances that they will consider. We don't know if OMB will grant the government-wide exception. The last administration's OMB said they didn't feel like they had the authority to do that. We don't know how this OMB will function, but again, that was the intent, is that OMB no longer does issue those government-wide exceptions. We do have, again, the last one that they did was related to wildfires and hurricanes. That has very limited applicability, and that extension has really lapsed at this point, but we do make sure to note that because that is, of course, included in the compliance supplement and could affect that timeliness of the low-risk auditee status. And then last but not least, this is more of a resources slide for those folks on the call. This gives you the hot links to all of the editorial material that's out there related to the 24 uniform guidance revisions from COFA. So you can certainly reach out to those specific links and get that information if you already have not reviewed it. And with that, I think I'm going to turn it back over to Kiva with 1 minute to spare to close us out here. So thank you, everybody, for attending today. We really appreciate it.
Thank you, Blaine. Perfect timing here. Thank you, Blaine, Anita, and Hilary, for a great presentation today. If we didn't have time to answer your questions, we will do our best to follow up with you after the webcast. As always, please feel free to reach out to any of our presenters with additional questions. Finally, here's a link to a survey for today's presentation. Your feedback is always appreciated. Again, thank you for joining us, and take care, everyone.